Because of that, I always like to explain this to people. Forex is very good. Forex is very lucrative. Crypto is very good. It is really lucrative. It is not a get rich quick scheme. You should have this at the back of your mind. So you can get in and you take 1 month, you make very good profit, or you can get in and you take even 6 months before you start making good profit. I mean, you will make some profit, you're making some small profit, but it's not like you just get in and immediately start making profit. Now, there are two kinds of people in the forex market or in the crypto market, in trading generally. Some people, they make profit by hard work, and some people, they make profit by luck. Some people are lucky. You just see a good trading opportunity, you place a trade, you take high risk, and you see them becoming millionaires overnight. So you should have that at the back of your mind. It doesn't mean if somebody did that, then you must do that. That is luck. So please, this thing is you need to take your time and you learn. It's a gradual process. You take your time and learn. You need to sacrifice time and you really learn. So that is it. So this training will be for 2 months, and we have classes on Tuesday, on Thursday, and on Friday. Just this morning, we have 1 hour. Now, the other days will be for assignment. I've already sent 2 books. Those books are always one. Those books, please, that is my private property. Especially this PowerPoint. It is my private property. This is just one of the PowerPoint. We'll get into technical analysis. I'll send another PowerPoint. So it is my property. Do not share with anybody, because if you share and I discover it, you may be gone. So please keep my properties private. Now let's get to the introduction. So we'll be talking on Forex, and we'll be Forex and crypto. So we'll start with Forex. We'll actually do Forex introduction, how to place a trade on your MetaTrader 4 interface, and up to technical analysis. We'll get into technical analysis. Please understand this. We'll get into technical analysis, then technical analysis will be combined. So be Forex and crypto, because the chart is the same. The analysis we'll do will be the same. So if we are dealing with technical analysis, you apply that to Forex and you apply that to crypto. Then when we are done with technical analysis, we move now to crypto. How to trade on Binance, how to buy coin, what is a cryptocurrency, Bitcoin, and the rest. So actually do all those things, then we teach you how to trade crypto. I don't always like to merge them, and the reason is simple. If I teach you Forex, introduction to Forex, then I teach you crypto, if I go to technical analysis, you will be confused, because the crypto interface, Binance, trading on Binance is really, really complicated. The interface is frightening. So that is why I always like to teach the first Forex, then I teach technical analysis. Before we get to crypto, you have already mastered how to use the Forex interface or the MetaTrader 4 interface well. So get to crypto, you will not be confused. So that is it, and that is how we will work. Let's get to business. So start with introduction. And please, introduction, some people take it lightly. Introduction, there's nothing that is irrelevant in Forex or in crypto. So the introduction, there are times that I get on my chart, I do analysis, and you discover I go to what is Forex and get something from there and make money from that. So it's very important for you to know that. So actually, what is Forex? I know there are some people here that don't know anything about these things. Forex simply is an abbreviation which stands for foreign exchange. Now, when you get to maybe the bank, you have maybe a $1 or you have a $10, you go to the bank, you want to exchange for CFA francs. That is actually Forex, that is trading in currency. So get to the bank, I exchange or exchange at $10, they give you maybe 5,500 or 5,600 or 5 to 6,000, and you come back with your money. So that is actually trading in currency. Now, let me use this logic. This is introduction. If you know, you discover, if you have ever been to the bank or you have ever done any exchange, you discover at times that you go to the bank maybe with $10, they give you, they exchange it and they give you 5,000. There are times that you go, they give you 5,500. There are times that you go, they give you 6,000. So if you sit and you think, If I can do an exchange, I have maybe 500,000. I go to the bank, I exchange for dollars. They give me maybe $800 or $900. And I know within 1 week, I'll come back and the dollar that was exchanged or the CFA that was exchanged maybe 560, then they give me $1. If after 1 week I come back and I'll exchange that same amount for 600, then if you exchange for 600, that is 40 francs per dollar. If you have about $800, 800 times 40 is how much? That is money you are making, and that is what we do in Forex. So just do an exchange of one currency for another. If you can actually know, you can do a prediction. You say the exchange rate is supposed to increase to this level at this particular time or within this period, then you can make good money. So actually, we take advantage of the fluctuation in exchange rate, and we make money from that. So that is simply Forex, and that is how we trade Forex. It is not going to the bank and buying or selling those things. It is actually sitting in your house. I just click on a single button and the trade is executed. We'll go detailing, you understand how that is done and why you can actually do it that way. So Forex is an over $5 trillion financial market. It is the largest financial market in the world. So many people, they trade it, so many people. And since it is the largest financial market in the world, then it is really, really stable. Some people move from one group to another. I always like to explain these things. I don't teach people only to trade Forex. I don't teach people how to trade crypto. I teach people how to be smart, and I teach people how to stay away from scammers. Some people move from one group to another, and yesterday somebody contacted me that he wants to invest. I say, invest in what? If you want to invest, pay the money and learn. I don't get money from people to trade for them. So some people move from one group to another, they start telling you to invest and the rest. When they move from one group to another, they tell people to invest. So many people that don't even know, after that, they come, they tell you Forex is scam. This is the reality. Forex will never collapse until everybody is gone. If Forex will collapse, it means you always stay in your house. You will not move from one country to another. So far as you can do an exchange, then Forex will always be there. So Forex is a $5 trillion financial market. Then crypto is about $1 trillion. So crypto just started. So it is not too stable. That is why the moves in the crypto market is really, really funny. So I'll get to crypto and I'll explain detailing about that. So Forex started since the Stone Age. It started with trade by barter. It moved to cowries. And now we can actually trade currency because we deal with money. So it started since the Stone Age. And that's why I said it will never collapse. So there's a difference between Forex and stock. There's a difference between Forex, indices, and the rest. So Forex deals with currencies only. If you are trading stock deals with commodities. Now, currencies, you can have maybe the CFA francs, you can have the dollars, you can have the Japanese yen, you can have so many currencies. That is Forex. But with stock, you deal with things like you deal actually with commodities. You can buy maybe gold, you can buy Apple, you can buy IBM, you can buy WhatsApp, you can buy Facebook. All those things, those are actually stock. So you can trade stock, you can trade Forex, you can trade indices, maybe the NASDAQ and the rest. All those things, you can actually trade them. But Forex deals only with currency. But with the knowledge in Forex, you can trade any other thing. And that is why I combine this course. Because if you understand Forex, if you understand the Forex chart, you can trade anything, anything. So that is it. Now we get Forex, we trade currencies. When you buy, remember, you know the price of these things will actually increase by, and because we're expecting it to go, is it? And that is currencies. So we trade currencies. So and I always tell there are major currencies in the Forex market. So if you are trading, not go there and see CFA. We have major currencies and minor currencies. Now for the major, this is Canadian dollar CAD. You have the Australian dollar AUD. You have the Swiss franc CHF. You have the Euro EUR. You have Great Britain pound GBP. You have the Japanese yen JPY. You have the NZD New Zealand dollar. And you have the US dollar, United States dollar. These are the 8 currencies. These are the 8 major currencies. Now, with these 8 major currencies, you can trade them. These are the names. Please, I sent this PowerPoint in the morning before I started, and you need to know the abbreviation. You never get on your chart and they tell you Canadian dollar. So you need to know the abbreviation because this is what you will be using. So that is the currency. Then this is the country. Then this is the currency, and these are the nicknames. So there are times I need to know all these things. The nicknames, you may know them too, because in those books, some of the books will tell you 20 bucks. Some books will tell you this amount. Some books will tell you this amount. So if you cannot get the nicknames, then you will be confused. If you don't understand the nicknames, you will be confused. So that is why it is important for you to know all these things. These are the major currencies. Please pay attention to this. So if you start trading, I'll advise you to trade the major currencies, not minor. Trade these major currencies. These are the major currencies. So that is it. Then for the minor currencies, you have things like the rupee, the Indian rupee, the South African rands. Then you have the Mexican peso. Those are minor currencies. There are so many of them. We'll get to MetaTrader 4 interface. Then actually you get the different currencies. They are there. You just see them. The minor currencies, I know the major currencies too. So this is what we trade in Forex. Now, we have currency, but I said if you want to do an exchange, you must have two pairs. You must have two currencies. If you go to the bank to do an exchange, you must have maybe CFA and need to exchange it for dollars. Currencies actually occur in pairs, and that is what we trade. So if you get in, you see maybe this currency, you have the euro. This is a currency. USD JPY. This is a currency pair. Know the difference, currency and currency pair. This is a currency. This is a currency pair, but in the currency pair, we have two currencies. So this is euro and United States dollar. This is euro and United States dollar. So if you have a currency, and remember there are 7 currency pairs. There are 8 major currencies, but there are 7 major currency pairs. So if you have a pair, maybe euro/US dollar, and this pair, it is written like this, and we call them quotes. QUOTE. This is a quote. This is a quote. This is another quote. Now, if you have this pair, euro USD, what does it actually mean? It means you are exchanging one currency for another, meaning you have euro and you want to exchange for CFA for US dollar. So you have euro, I want to exchange for US dollar. This one, USD JPY. You have United States dollar, I want to exchange for Japanese yen. So that is actually what it means. And now I said, when you get maybe to the bank, I know the value of a currency will increase. What do? You can buy the currency when the value is low, and when it gets up to a certain level, then you make good profit. Because remember, I can buy a currency and get to the bank, I exchange a currency, maybe dollar, and exchange for 500 or 550, and when it gets to 600, you go back and exchange and make good profit. So you actually buy when the value is low, and when it gets up to a certain level, then you make good profit and you exchange your currency. So you exchange your currency back to your base currency. That is actually trading. So if you buy a currency with a low value, maybe CFA francs, you buy when the exchange rate is low, then when it gets up, you make good profit. What does it mean? It means you're exchanging maybe CFA, and you're exchanging CFA to maybe USD. So you go to the bank exchange and it goes. So this is actually what it means. Euro/USD, it means you're exchanging euro for United States dollar. If you have USD JPY, it means you're exchanging United States dollar for Japanese yen. And that is how it goes. So these are the 7 major currency pairs. Please pay attention to this. These are the currencies that you need to trade when you just begin. Beginners, I always advise them to trade this currency. And I'd like to say this. Forex is a set of rules. Simple. You follow the rules, you make your money. You go against the rules, then you may lose money. And I always, when I get the details, I always repeat. So when I repeat something, if you have a pen or a paper, you need to jot, because those are the details that you need to understand. So these are the major currencies, and these are the currency pairs that you need to trade. It's really important. Let me see. Okay, we'll get to this. And there's what we call the particular group of persons or the organization or the firms that actually drive the forex market towards a particular direction. Those are what we call market participants. Now, the main participant in the forex market is the bank. We have the bank, then we have the government, and we have they organize the forex market in this way. All the transactions are done in the bank. So even if you are trading, maybe you are trading forex, then you get to the bank, you do an exchange. That is actually the main point. That is the pivot where all the transactions trade. Meaning, if you are on your, or maybe in your house, because you trade forex in the house, you don't need to go to the bank all the time. You don't go to the bank even. So what they do is they link you to the bank, they trade based on that. You trade and make a profit, you can close the trade, so you can just buy, or you can sell that currency. Means when the transactions in the bank are dormant, then you may not be able to trade. Therefore, if you have international public holidays or during weekends, should you trade during weekends? Saturday and Sunday, the forex market is closed. When there's international public holiday, you may trade it, but the market may be very funny because the banks, the banks may be, international banks may be closed. I may see a funny kind of move in the market. Therefore, if you are trading during that time, you may lose because you may see a move. This is actually what happens. You may see a move. After that, you see it goes up. After that, you see it comes back down. It behaves in a funny manner. So at the end, you may actually end up losing money or you make very little profit. So international public holidays, do not trade. December, do not trade. During December, there is vacation, especially in the US, there's vacation. Then some trading firms, they go on vacation. Then it banks to so many people that go on vacation. So December, do not trade. These are the details that I am telling you. I know people, especially in South Africa, that they take the whole year, you see them making millions, and in December, they blow everything because they don't understand all these things. So in December, if you cannot manage your account, you stay out of the market. Me, December, I don't trade. And that is why I always advise people not to do. Don't trade in December. Trade from January to maybe November, December. You sit and forget about trading. It's really important because if you trade in December, you may blow everything that you have made. So that is the main participant. Now, the second participant is the government. And remember, the exchange rate of a currency may increase or may drop depending on the economic activity of that country. Take note. So it may actually drop or it may increase depending on the economic activity of that country. So if the government decides, that is why at times that you get maybe to the US and you see, especially this former president, Donald Trump, he just gets in and make a funny statement, and you see they say the value has devalued the dollar. There are times that you get, maybe you are listening to maybe news, like I think some months back, there was what we call the US-China war. The US China was threatening to get all their investment out of the state. And by that time, you discover that the value of the dollar actually dropped. It dropped very well, maybe to 500 or 400, about 490 something francs. So that is actually what pulls the exchange rate of a currency to actually go up or it can go down. So when a government comes and makes a funny statement, you know it may change the value of that currency. That is the first method. Then the second method is by, actually, I don't know whether we did economics. I just did it partially from 5, but when the government makes a funny statement, it actually changes the direction. Now, that is the first method. Then the second method is by controlling what we call inflation, or by alternating the interest rate. And this is how they do it. Take, for example, I'm used to the American economy. When the value of the dollar increases or it drops, they have policies that they put in place. That is what we call the central bank policy. They have policies that they put in place, and immediately they see the value drops to a certain level or it goes up to a certain level and they're expecting inflation, then they just set some policies. I see it just back. Now, this is the first method. There's what we call NFP, non-farm payroll. It's statistical information that is released every first Friday of the month. So when you are trading, please take note of this. Every first Friday of the month, most often it's at 1:30. So at 1:30, if you are trading at 1:30, you are not careful, you always have these kind of problems. So at 1:30, I don't trade, I stay out of the market. Very important. So that statistical information tells you of the number of unemployed persons in America. And when it tells you of the number of unemployed persons, if the number of unemployed persons increase, then you know the economic activity of that country has dropped. And what do? Simple. They reduce the interest rate When they reduce the interest rate, it attracts investors into that country. This is introduction. That is what you need to know for now. We'll get to fundamental analysis or emphasize more on this. So that is how the government actually influence that. Then some governments actually buy back their own currency. When they buy their own currency, when the value drops, like in the US, the value of the dollar may never drop below 400. It will never. Because when they immediately drops, they can buy back their own currency, or they do one or two things, I see it goes back to normal. So that is actually how the government influences the forex market. Then the last participant, we have the organization. Now the organization is a temporal move, meaning when you get on your chart, there are times that you see, take for example, Bill Gates Foundation just come and say, I want to help Cameroonians with $1 million. Immediately they make that statement, they give the money is given in dollars. And when they do an exchange, maybe to CFA funds, because we need CFA funds to implement maybe or to do some contracts, immediately they do an exchange, you see the value of the CFA funds increases abruptly. So this is a temporal move. So when they do it, you see the value goes up, and within 2 hours, you see it comes back to the original position, because that increase was not caused by economic activity. So the economic activity of Cameroon did not actually increase, but because somebody sent money, it caused the move to get up and it goes down. So actually see all these things on your chart, on the forex chart. You actually have statistical information that will do all these things there. So those are the three main participants: the bank, the government, and the organization. Now you should understand that we have natural disaster, it changes it affects the forex market too. So when there was COVID-19 actually rampant and there was lockdown everywhere, they understand what it means. Practically, we could not even trade forex because you don't see any move in the market. You see, it buys, it sells, so you could not trade it. So you need to understand natural disaster always affect these things. So if you get in, I need to be updated too. The size I can check all these things there. It's not like you should be watching TV 24/7 because you are trading. If you get up and they say there is natural disaster, maybe in Japan, they know the value of the yen will drop. If there's natural disaster, maybe in America, you know the US dollar may drop, the value of the US dollar may drop. So those are things that you need to understand. So that is trading market participant. Then we move now a few minutes to go. Trading time and trading session. As I said, the forex market is not up today, the market is open, and on Saturday and Sunday, the market is closed. Now, Monday to Friday, the market is open, but it doesn't mean trading session. And the trading time is the time that you can actually get in and make very good profit within the shortest possible time. It's the same like the market in Cameroon. If you get to the market, some markets, I don't know, but they close the market at 5:30. So if you get to the commercial venue and you want to buy something when the market is closed, maybe at midnight, you may buy a liter of maybe one tangy, maybe for 1,000. What happens? So the forex market, if the market is open, there are so many advantages that you can do it. Trading session, we have 4 different sessions. Please take note of this. 4 different trading sessions. We have the New York session, we have the London session, we have the Sydney session, we have the Tokyo session, and we have the Frankfurt session. These are the 4 different sessions that you need to take note of. Because this session, they carry what we call liquidity in the market. The London session carries about 40% of the money in the forex market. The New York session carries about 20%. Then this Tokyo session, Sydney session, and the last session, the Frankfurt session, it carries less than 10%. So that is why I don't pay attention more to this. Attention to the London session, the New York session, and to a certain extent, the ASEAN session, which is the Sydney session. So this Sydney session is the same like the ASEAN session. So these are the 4 main sessions that you need to know. Now, the London session, it opens at 8 o'clock Cameroon time and it closes at 5. Meaning when the London session opens at 8 and at 5 it closes. So if you are trading forex, this is the best time for you to trade. The session has not opened yet. We have about 2 hours to go. So when you trade within that time, you can make good profit within a very short period and you benefit from so many things. You will get it until you understand those things. The New York session opens at 1 1 p.m. and it closes at about 9 p.m. So let's just talk with these 2 sessions today, then tomorrow, or yes, tomorrow we have a class tomorrow. We can talk on the other sessions. So New York opens at 1 and it closes at 5 p.m. So discover within this London session and the New York session, there's an overlap. But the pairs, which pair do I take during the London session? This is the London session, and these are the pairs. You trade the Great Britain pound, you trade the euro, and you trade the Swiss francs. These are the 3 pairs that you can trade on the London session. The Asian session, you have the Japanese yen, you have the Australian dollar, and you have the New Zealand dollar. So if you have a pair now, you have a currency. I said in Forex we trade currency pairs. So if you have a currency, maybe Great Britain pound, you need to pair that with another currency. So you have Great Britain pound, Swiss francs. These are 2 pair. This is a currency pair. That is a code. So if you trade this during the London session, it will be good. So if you have a currency, Great Britain pound, then you have maybe Japanese yen, you can trade during the London session because it's found here, and you can trade during the Asian session because it's actually found within the 2 sessions. So that is it. That is trading time and trading session. Tomorrow we'll continue. We'll go detailing into these things. I don't really like to give too much information. So that is it. Is there any question? Any question, you can just ask. You can unmute yourself and you ask any question if you have. Okay, nobody is asking, meaning there is no question. So since there's no question, that will continue tomorrow. I recorded this video, so I'll upload in the YouTube channel. I'll upload and send a link for you guys to watch again. So that is it for today, and I hope the class was really interesting. This is introduction, please. There are things that you may not understand now, and that is how introductions are. You may not understand now, but we'll get detailed, you understand. I actually use those things. For us, it's practicals. So after the introduction, we'll actually explain, we'll get detailing, and we'll do it. So tomorrow we'll continue. And please, before I end, make sure you go on your phone, you download MetaTrader 4, MT4. Trading is done on MetaTrader 4, MetaTrader 5, or C-Trade. So download MetaTrader 4. Tomorrow we'll try to show you the chart and how you can actually use it too. So that is it for today, and next class tomorrow. Please, those books, you start reading them now. The PowerPoint, make sure you read them now. It's really important. That PowerPoint is for you to get the guide, and if you get to the book, you know how to read. Don't just read anything in the book because you get confused. So go to the PowerPoint, look at the next topic that we are supposed to have tomorrow, then you read. Make sure you read what you have been taught today. Then tomorrow, you read ahead. Tomorrow, make sure you have the topic read. You may not understand, but when we start the class, then you understand so many things. So that is it for the class of today, and we'll have the next class tomorrow if there's no question. So see you guys tomorrow.